Good afternoon. Earnings and inflation are kind of in the headlines this week and setting the stage for the Fed to come next Wednesday. So this week is definitely a glimpse of what's to come, and certainly next week is going to be quite newsworthy depending on the Fed's press conference. So we'll kind of break down what we're seeing there as well. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. Before we get into the meat of today, I do want to touch briefly on some housing data. So yesterday, new home sales data came out and actually up much higher than expected. And just today, pending home sales actually came up much higher than expected. In fact, expectations were that pending home sales were going to be down for the month, and they were actually slightly positive. So good news from the housing data front. And then also to maybe continue the good news trend, today we had GDP numbers come out. So this was really important. And if you've watched the market today, you know that maybe it wasn't looked at very heavily, but nonetheless, today GDP numbers came out at 4.9%. So this was a huge jump. I believe it's one of the biggest we've seen in quite some time. But to be clear, this was expected, right? I think we can see that by the market's movement today. I would say that this comes with a little bit of an asterisk as well. But regardless of the asterisk, the reality is that the markets expected a good print on this GDP number today. And we can see that because they really, there was no positive response around this. And I think a lot of that is due to the fact that, we have the Fed meeting coming up next week. Earnings have been, not so great. And obviously, it seems like all of a sudden, again, this conversation of where the economy goes from here is picking back up, whereas the negative tones seem to settle quite a bit looking back the last few months. And certainly seems like things have shifted from that aspect. So again, great GDP number for the quarter, but it was expected. There's a little bit of an asterisk, and really the markets are not reacting to this yet anyways. We also had initial jobless claims come out again today, slightly stronger than expected, and definitely another good data point there, which is very timely given that, of course, the Fed press conference and decision comes up next week on Wednesday. So what I want to do is spend most of our time today on this question of the week about what to kind of expect there. Before we do get to that, just know that next Thursday we'll be touching on the inflation data that comes out tomorrow. And of course, we'll be debriefing from the Fed's press conference on Wednesday. So certainly tune in next Thursday. We'll kind of share some between the lines view on what the Fed Chair Powell shares next week. But what I want to spend most of our time on this week is a question basically of what are we watching? And the question is, with the earnings story going on right now and the Fed coming up next week, what are we watching most closely, and how do these things play into how we're kind of viewing the markets these days? I will say that the short answer, as you could probably imagine, is both, right? These are both very, very important to watch. However, I will try and answer this a little bit more thoroughly and maybe with a little bit more meat on the bone here. So again, the answer is both. But what I will share is that the way markets have been going, the Fed is where the spotlight is. If there's a surprise from the Fed, if their Fed backs off, like whatever the Fed's tone is and what they suggest may happen moving forward is really where the market attention is, which is strange, right? I mean, the reality is, the earnings are probably the most important part. This dictates the value of an actual company, not necessarily if rates are at 5.25 versus 5.5. But the Fed does have big impacts on the economy, obviously, as a whole. It's a leading indicator. In other words, when the Fed raises rates, we don't see the impacts for quite some time. And so I think that's why we're seeing so much focus on the Fed and their path ahead here. Again, the earnings are still very, very important to watch, and we've had a lot of the big companies' earnings reported this week, so don't ignore them. But I think if it helps for the shorter run, the Fed is probably what's driving the markets the most lately. But for the longer term, there typically is a reversion to the mean. In other words, the earnings do matter. And obviously, you'll see movement short term as well, up or down, depending on what they report. But the earnings do matter. And when we're figuring out which companies to invest in and how we may want to structure investment strategies, especially if there are opportunities that come up with short-term Fed volatility or whatever it might be, earnings are critical. So definitely don't throw that baby out with the bathwater, so to speak. But again, the focus, of course, in the broader markets is really on the Fed. And so I would say that is going to be very important to see what they share next week. Now, as a little bit of a glimpse at what we're kind of expecting for next week there from the Fed, they did share last meeting. You probably remember that there's very likely going to be a rate hike at some point before the year end. I think that our general, our thoughts around this is kind of with the consensus, which is right now that this meeting next week, they probably will not hike yet. But I think that what we need to pay attention to next week is their tone and how they kind of project what may happen in the following meeting. Now, they're going to be cryptic, don't get me wrong. They're not going to tell us directly, but I think that we want to, kind of read between the lines, understand what he says more specifically, which might give us a little more guidance at what's to come in December. And again, they are going to react to data. So it's not like that's set in stone, but that'll give us a better, view on what might come before year end there. So this is going to be a really important meeting. Again, I don't expect actually any change necessarily. If so, obviously want to make sure that they're prepared for that, because the market would be caught off guard for sure. But I think that I would agree that we likely will not see a change on Wednesday. But the tone and the message that Fed Chair Powell sends in the press conference after is going to be what's most important to watch. So thanks everybody for tuning in. If you are interested in our take on that, make sure you tune in next Thursday at 3. We'll break down obviously the inflation data as well, but we'll break down the Fed's press conference and what we kind of took away from it. Have a great upcoming weekend. Stay warm if you're in the Pacific Northwest. It's supposed to be very cold this weekend. And we'll see you next Thursday at 3.